Hello, folks. Welcome to Pro Trader Strategies. It's Wednesday, August the 11th. I'm Eric Wilkinson. I've lost track of the days. It's been a crazy week already. We're an educational company. So, folks, if you want an education, it starts right here, and that's where you're going to start getting your edge in trading. I can assure you of one thing, and that is it. Also, make sure right down there below, there's a subscribe button. Click on that and a bell there to give you a notification. Like yesterday, I popped on here unannounced. I'm going to probably do that now and again whenever I find my trades. It's not always going to be necessarily dead on this time frame for that for this video, for my spotting the trade videos. All right. So also throughout this video, comment over there. You don't have to be a lurker. Join in on the fun. Comment over there on the side. As a matter of fact, we're going to make it a little bit more interesting. The comment section, we're going to be adding a little bit of a gamemanship to it. So you might be able to win something on the comments over there. Not necessarily on this day, but we're going to be doing a rolling thing where we kind of reward those who comment and make this a little bit more enjoyable for everybody else. So comment over there and smash that like button for us. It really does help us out. All right, let's get on with the economic data and see how that's impacting the overall markets. As of today, we've got our core CPI, which is Consumer Price Index. This is a gauge of whether or not the consumer is being passed on some of these higher prices. Now, when we're looking at the CPI number, it comes in at 0.5%. We were expecting this number to ratchet up a little bit, right? We've seen some higher prices here across the board in like crude oil. That could drive this price higher here on the CPI number, because what we do is strip out food and energy, because those are more volatile aspects on pricing at any given time, to get a better gauge of how inflation is affecting us. Well, it came in at 0.3%. That was lower than the expected 0.4%. That is what gave us an initial boost to the upside, but then people started thinking, well, maybe these prices aren't going higher because there's no demand. That's kind of given us a little flip on the switch on the equities, and we're starting to see some rotations happening. Now, earlier on in the week, we were talking about the NASDAQ working, and that reopening trade wasn't. Then it flipped, like almost the next day after Monday, we stopped worrying about this Delta variant. Well, something they're talking about in South America right now is the Lambda variant. So whether or not that starts migrating, all of these different variants are starting to come out, and that could cause a little bit more angst in the markets here. Crude oil is coming off just a little bit, as we got the crude oil inventories being a Wednesday, and that came in at a drawdown of basically 400,000 barrels. It was expected to be a drawdown of 800,000 barrels. So again, more of a build than what we were expecting. Remember, last month we saw that massive build, which was 3.6 million barrels. It was expected to come in at a negative. Crude oil inventories was supposed to be a negative number this month, less than negative on that. And last month, I think we were supposed to come in at like negative 3 million, and it came in at a positive 3.6 million. So continuing to see these builds over what was expected should cause a little weakness here in crude oil. You know, right now we are seeing it in negative territory, but that's not the kind of weakness I'm talking about, especially if we're seeing manufacturing slow down a little bit here. All right, so let's check out the markets and look at what's going on here. We've got crude oil, like I said, slightly in negative territory. Well, we saw these builds last week, that 7 million barrel build over what was expected. This month, we're getting about 400,000. That's not a major dent. As a matter of fact, that could be made up on any given week on the supply side. So I'm not really concerned about that showing a massive build there and, you know, giving us weakness like I would have expected from last week. And that we did finally start to see some weakness because of that build. Now it's kind of going to hunker down here, I think. Hold on to this mid 60s to lower 70s. I don't think we're getting up into the 75s again anytime soon, but I do think this mid range is going to be about where we kind of settle down. Something to look at would be on the ETF side would be USO for something like this on a trade, because it is the ETF. It's a little bit lower pricing for some of us that may or may not have a smaller account value. or you just want to not allocate as much to the volatility that you would see in crude oil. You know, one thing we used to say on the floor trading crude oil is if you trade crude oil, you have to love to lose money because it is a difficult market to trade, to say the least. All right, gold futures are moving higher here. Now, we are still continuing to see strength in the dollar. Now, strength in the dollar should weaken dollar-denominated assets here. We're not necessarily seeing those levers and pulleys right now in the markets. We're seeing since basically August, the dollar slightly, strengthening by about a penny and a half against the euro. That is strength in the market, but it's not going to be enough to make up for some of maybe the flight to safety that we are seeing here in driving crude oil, driving gold and Bitcoin. Now, something to talk about with Bitcoin. Now, I have been a little bit iffy on Bitcoin and looking for it to cover the gap that we've been talking about when we started getting the sell-off. Now, the market totally defended this little gap here. As a matter of fact, I'm going to try and draw it in as a not a very good line, but that gap right in there somewhere. Let me try and erase that. Let me do that again. But everybody can see this little gap right there, right? So I'm not drawing a very good line, but we never really came down and covered that gap with Bitcoin. And I was expecting, with a lot of the negative headlines, with it being boomer coin and things of that nature, was going to be a little bit of a tough road to hoe in Bitcoin here. But a couple of things that have come out since then. We saw that the theater, AMC, is going to start allowing Bitcoin purchases on their platform. Now, to me, that is huge, because then it's going to be more of a snowball effect in Bitcoin here as it starts gaining traction. Now, I was looking at Ether being the one that started coming out of all of this, but more and more acceptance by the major corporations is going to flip this back into the camp of Bitcoin. Venmo also said that they are going to start allowing people to purchase cryptocurrencies, Bitcoin they named, on their platform here really soon. So that's another company that is going to be adding purchasing power with Bitcoin. Now, remember way back I talked about, I'm going to lowball these numbers, but it's close to 90% of all Bitcoin has not been transacted, meaning if I own Bitcoin, I've never traded it, all right? So that is something I think we'll start seeing churn a little bit more. Now, that could create even more volatility in Bitcoin, because think about it, folks, when more and more companies are accepting Bitcoin and they are really dollar denominated, that causes a currency risk as they fluctuate against one another. So some of these companies are going to have to start having part of their company dedicated to hedging these different instruments. And that is something nobody's talked about. So there's another opportunity there where if I accept Bitcoin, but I am using my balance sheet in dollars, I have to somehow make sure that when Bitcoin's fluctuating at $10,000 a crack, that isn't hitting my P&L necessarily. So as soon as I accept Bitcoin, I'm going to need to offset that or hedge it. That's going to drive more volatility and volume to these cryptocurrencies. So they are starting to gain a lot more traction now. Now, bonds slightly coming off a little bit, half a point today. Not really a whole lot to talk about. I think they're really quite at their sweet spot. And we're seeing the VIX come off a little bit, and the NASDAQ. Now, usually when we see the VIX coming off, that's an indication that we're seeing some movement to the upside here in equities. Well, we are in the rest of the equities. This is, again, this sector rotation, possibly out of these techs and into some of the blue chips or some of the stocks that are associated to the reopening trade. I've talked about this for a while now, that I've been getting involved in this reopening trade through the casinos, travel and leisure, if you will, and a little bit in the airlines, because that's the sector that's been beat up the most. We're starting to see those guys come out of this a little bit from their sell-off. So I'm trying as hard as I can not to get involved in some of these, but they're just very juicy premiums if you're thinking about collecting a credit there. But again, all-time highs intraday in the Dow Jones Industrial Average, E-mini S&Ps, another all-time high that was created intraday right off the open. You can see these boys and gals were charging for this all-time high here. Now, again, we're marching higher, folks, but we are not seeing massive snaps either direction. So the shorts in these markets are staying in these markets short. They haven't gotten any kind of snap to the upside to get them out. And on the long side, these folks are saying, I'm staying in this because it's a slow trudge to the upside. That is a complacency problem, folks. And usually with the complacency, that's when we start getting those big outside paced moves. All right. When the market is expecting a big outside paced move, it doesn't happen, folks. And when we don't expect that outside paced move, that's generally when you see those spikes in the markets or the massive sell-off. So in the last year, we haven't had a major sell-off. We just recently went through one that felt like one, but it wasn't quite a 10% correction. Now, that's part of that whole winding up the rubber band. Remember those old balsa wood airplanes? You wind up that rubber band. The more and more you wind it up, the faster it snaps when you let go. That's similar to what we're seeing here in the overall markets. Is this market, when they get complacent, it's like that rubber band winding up. And the longer and longer it gets wound up, the more it snaps. Okay, so we are winding up quite a bit here. And a snap to the upside or the downside could be imminent. So we're talking about option strategies in the webinars right now on swing trades, and we're specifically going to be touching on those here shortly, where the market is expecting a move and we think it's going to start to settle down. We can take advantage of that. Also, we're going to be talking about option strategies where we don't necessarily know what direction it's going to go, but we've seen this rubber band winding up and we've seen this story before. We're going to basically try and jump to the end there and have our strategy set up for a snap before it happens. So E-mini S&P is starting to see that sell off here. I think that they blew off a little bit too much to the upside. People were talking about CPI being the catalyst for this. I don't think that was necessarily the case. I think it really was just a bull charge here for a new all-time high to get that print during the intraday session there. And then we're seeing that weakness start to happen here. Now, August, September, folks, are usually very complacent. We see volumes really start to shudder here, and that lower volumes here could cause a little bit more volatility as well. In the equities. Usually we see these things start to sell off and move sideways. You've heard sell in May and go away. Well, that usually has to do with the summer markets here and the lack of volume. You want to try and capture that. Well, August is usually a sideways to possibly down month. And I think a little of that is going to creep in the markets because we've been at this all-time high. We've seen this story before, and I think that we're going to start to see this market look to roll over here a little bit. All right, Bank of America. This is one of those trades that I've been looking to play around with. You guys know that I took off the short calls in this market, in Bank of America playing to the downside. So I took off the strategy, or looking to take off this strategy, because we did this on the on the put diagonal on this. Sorry, my computer is freaking out and it's causing me a little bit of a problem here because I can't even see the other screen. But if you guys remember, I'm going to try and go back from memory here. And so please don't bash me too bad if I'm slightly off on my strategy here. But in Bank of America, I did the SEP-AC put diagonal in there, if you guys remember. So in the September that is going to expire relatively soon here, I was able to sell the 36 puts in there, originally for 34 cents. I'm trying to buy those back for a nickel. That's the short put. Now I am using that short put, or I used that short put to buy the longer duration October 43 puts in there. So with this strategy, we're buying an in the money put and financing that extrinsic value, that theta decay by selling the put. Now I'm trying to get out of the put because it's pretty much done its work. Remember, I sold those for 34 cents. I'm trying to buy them back for a nickel, and last trade was about 15 cents. So I'd like to see a little bit more of depreciation in these short puts before I get to cover them. Then looking for that rollover. So this directional move, although most people would look at it as being completely directional wrong, well, when I'm short that put, I want that to happen. So the market's rallied up. It's testing my my long puts at these 43 level, right? I'm still shy of that, but this is kind of like what we're looking for. And then a pullback back down to that point of control there. Now, I talked about this at the beginning when we were doing this trade. I want a sideways move, maybe possibly higher, which I ended up getting the sideways to possibly be higher move. That's going to allow me to cover these short puts relatively quickly. Now, we can do what we talked about with DIA and roll those short puts out in time, maybe make the spread a little bit wider, all of those things, or just take them off and let the market ride down. So with Bank of America, I'm looking to cover the short puts of my put diagonal, and that's the shorter duration short puts that I use to finance the long puts, all right? Because anybody that's been watching my videos knows that I do not like to buy options unless I can have some way of financing that off a little bit, which is why I would use something like the put diagonal, the call diagonal that we talked about with the DIA, or the Dow Jones Industrial Average ETF. Trying to do similar with this one, adding this downside for me. I talked about this. These more regional banks are going to be a little bit more, and this is kind of a mid to higher, larger bank, but I think they'll still struggle if we continue to see lower interest rates here. And that's all I've got for you folks. Other than, make sure you subscribe and hit the notification button, folks, because I'm not always coming on at a scheduled time. If I find a trade, I'm going to pop in here. So make sure you guys got the notification so that you know when I'm coming on. Yesterday, something came up. I had to do it a little bit early. So I want to make sure you guys are on here with me. All right. And subscribe, comment over in the side. I'll circle back around, make sure everybody's clear of concept. If you guys want me to cover something in these webinars, throw it out there. I'd be happy to chat with you about it. Also, we're going to be doing some fun stuff with the chat over there. So start commenting in there and tell me what you want to look at, because we're going to do something fun with those here in the near future. Like I said, smash the like button. It does help us. And finally, if you can't take that, take it easy. Bye for now.